Guest is sitting in the studio patiently waiting. More than $27 billion wiped off the local market today. Energy stocks leading the losses as oil prices slip below that 50 US per barrel level. Peter McGuire, he's CEO of XM Group, and he's joining us now live from Sydney. Good afternoon to you, Peter. Welcome to the program.
Good afternoon, Nadine.
Why don't you tell us about that Baker Hughes rig count? Give us an update. My friend here, Mark Todd, is hanging on the edge of his seat.
Well, I always ask Mark every week, Nadine, you know, where the numbers are, what's happening as far as count and so on. We had some reasonably good numbers last week, but where the market is at the moment, there's talk that we're getting to a point with Canada and, of course, what's happening with Nigeria. The market seems to be levelling itself out a little bit, so we may see a return and even more rig count entering the market over the coming weeks. So as we move forward to that Northern Hemisphere summer and driving patterns and increasing consumption, and of course in the Europe as well, we may see better numbers.
Pete, I'm here for you as always.
Thank you, Mark.
It rose in the US by 6. The thing that blew me away, so the US rig counts rose by 6 to 414. In Canada, it rose by 24.
Yeah, well, remembering that we had amazing. A lot of that as far as tar sands and what happened with the wildfires going back a couple of months ago, Mark, and that really put a handbrake on the Canadian situation. So I'd say that a lot of those particular rigs are coming back online, and with higher pricing, a lot of those guys were out of the market at $35 and $40 a barrel. But as it enters that $50 US, and the US dollar's been stronger against the Canadian dollar, it's been a windfall for these guys to enter and regain some market share.
Why do you look at me when we talk about Canada and rig counts? Anyway,
your accent. I don't know.
I don't know, Nadine.
Peter, so talk to us, I guess, perhaps about OPEC. I mean, OPEC is pointing to oil demand exceeding output for the first time in 3 years.
Exactly right. Yeah, there's talk as as this year moves on, we could see that positioning due to the likes where we saw Canada and, of course, Nigeria taking supply out of the market, Nadine. So in turn, the big producers and of course, the Middle East and the Saudis, of course, will play very easily into that, and we'll probably see increasing supply coming online, and we're looking at, increasing, of course, from the demand side. So I think it's going to be not a bad time to be a producer moving forward. But we've got some problems ahead, I think, as far as Brexit, what happens there, and where the US dollar plays. So, I think it's going to be a volatile time for crude pricing.
Speaking of Brexit and US Fed and US dollar, of course, its influence on the metals market, in particular gold, already at a 4-week high.
Yeah.
Is there much more upside to gold?
When you look at what's happened over the last matter of weeks, since about the 3rd of June, Nadine, it's up around about 5 or 6%. It's been very, very strong, now sitting around that 1280. The market is, Brexit mania and what's happening there, I think it's going to drive it higher. A point needs to be taken into consideration. When UK pounds, we're at 3-year highs, about £909 for an ounce of gold. So I think that's going to push higher. You've got the big boys like the George Soroses, Druckenmillers and so on entering that market. So we've seen a very interesting play coming out of the Spider Trust, the largest gold-traded fund, at very, very strong numbers as of last Friday.
So, Peter, we're running out of time, but if you're looking to make money in the markets that you're traveling in right now, what are you doing?
I reckon you'd have to look at gold. I think there's more upside there because of what's happening with Brexit. I think that could, pop through 1,300, and I'd probably look at the crude market, and I think it could be a short for maybe a week or so. So that's where I'd be looking, Nadine.
All right. Peter McGuire, thank you. Short but sweet, as always.
Thank you.